Hello! Here is a detailed slide-by-slide explanation of the Skyways Air Services IPO presentation. Slide 1, Title Slide. This is the opening slide. It introduces Skyways Air Services IPO details. The company is launching a mainboard IPO of approximately 583 crore rupees. The price band is 131 to 138 rupees per share. Key dates shown are IPO opens on 24th August 2026, closes on 27th August, and is expected to list on 1st September 2026 on both BSE and NSE. Slide 2, IPO Snapshot. This slide gives the most important numbers at a glance. Issue size is 582.80 crore rupees, which includes both fresh issue and offer for sale. Price band is 131 to 138 rupees, face value 10 rupees. Lot size is 100 shares, so minimum investment at upper band is 13,800 rupees. Fresh issue is about 398.80 crore, equal to roughly 2.89 crore shares. Offer for sale is 184 crore, which is 1.33 crore shares being sold by existing shareholders. Listing is planned on both BSE and NSE on 1st September. Slide 3, IPO Timeline. This slide shows the complete schedule. 21st August, anchor investor bidding, already completed. They raised around 174.5 crore. 24th August, public issue opens for subscription. 27th August, issue closes. 28th August, basis of allotment expected to be finalized. 31st August, refunds will be initiated and shares credited to successful applicants' demat accounts. 1st September, shares expected to list on the stock exchanges. Slide 4, about Skyways Air Services. Skyways is India's #1 air freight forwarder by AWB generation for the past 4 years. Founded in 1984, it started as a customs house agent and has grown into a full multimodal logistics company offering air freight, ocean freight, trucking, warehousing, express cargo, and customs brokerage. Air freight still contributes about 77% of revenue. In financial year 2026, the company handled nearly 84,000 tons of air cargo, served over 9,500 customers, operated in 12 countries, and maintained relationships with 56 airlines. Promoters are Yashpal Sharma and Tarun Sharma. Slide 5, Financial Performance. Revenue from operations grew from 1,289 crore in FY24 to 2,248 crore in FY25, and further to 2,813 crore in FY26. EBITDA improved from 48 crore to 126 crore, with margin rising from 3.75% to 4.47%. Profit after tax increased from 34.5 crore to 63.5 crore. Net worth more than doubled from 154 crore to 333 crore. Slide 6, Objects of the Issue. How the company will use the fresh issue money. Approximately 216.79 crore will be used to repay or prepay borrowings of the company and its subsidiary Foreign Container Line. 130 crore will go towards funding incremental working capital requirements. The remaining amount will be used for general corporate purposes. That covers the first 6 slides. Slide 7, Reservation and Application Details. This slide shows how shares are reserved among investor categories and the investment amounts. 50% is reserved for qualified institutional buyers, including the anchor portion of around 30%. 15% is for non-institutional investors, that is HNIs. 35% is for retail individual investors. At the upper price of 138 rupees, retail minimum is 1 lot, 100 shares, 13,800 rupees. Retail maximum is 14 lots, 1,400 shares, 1,93,200 rupees. Small HNI starts from 15 lots, 2,07,000 rupees. Big HNI starts from 73 lots, roughly 10,07,000 rupees. Slide 8, Promoters, Lead Managers, and Registrar. Promoters are Yashpal Sharma, who is Chairman and Managing Director, and Tarun Sharma, Whole-Time Director. Book-running lead managers are Kalani Consultants, Shannon Advisors, and Dolat FinServe. Registrar to the issue is Big Share Services Private Limited. You can check allotment status on their portal after the allotment date. Shares will list on both BSE and NSE. Slide 9. Valuation Snapshot. Post-issue market capitalization is expected to be around 2006 crore rupees at the upper end of the price band. Pre-issue price-to-earnings ratio is in the range of 36.8 to 38.8 times. Post-issue PE rises to about 46.5 to 48.9 times due to dilution from the fresh issue. Net asset value as of FY26 is 28.91 rupees per share. Please note that any gray market premium figures you see are unofficial and can change rapidly. Slide 10. Key strengths and considerations. On the strength side, clear market leadership in air freight forwarding, strong multi-year revenue growth, improving EBITDA margins, diversified service offerings, and planned reduction in debt through IPO proceeds. On the considerations side, the company operates on relatively thin profit margins of around 2.26%. The business is working capital intensive. There are regulatory and compliance risks inherent in logistics. The offer documents disclose an ongoing economic offenses wing investigation, and the company's authorized economic operator certificate has been under suspension. These are important risk factors investors should study carefully in the prospectus.